First time homebuyer tips and advice. Okay, so we've been doing a lot of planning calls recently. If you guys watch the channel, I did a video a couple weeks ago that was like, if you're thinking of buying, whether it's 6 months or 2 years, get on the calendar, let's plan. You know, we'll always answer your questions, everything else. Anyways, so Sandy and Alyssa and I were talking about some of the stuff that we're seeing consistently, and I thought, you know what, let's do a video because these are a lot of first-time homebuyer questions that we get, and I want to make sure that you guys have the best information possible. So one of the things that we hit is that people think that they have to pay everything off before they apply to buy a house, okay? And you don't. Let me be clear about this. You don't have to pay everything off. What generally is going to happen is if you say, hey, Jen, I want to buy a house in April, okay? As I film this, it's January. I would be like, okay, let's do an application now. You need a couple months to shop. We'll talk about that. Let's do an application now. And if you said, well, should I pay off this, this, and this before I fill out the application? I don't know. I don't know. And from my perspective, I would rather look at the whole picture before I tell you how to spend your money. Because what happens a lot is that people pay stuff off and it can actually harm them. So for instance, let's say that you have a car payment, okay? And you're like, I'll pay off the car. Before, you pay off the car before you apply. Guys, paying off a car generally will drop your credit score. I know, it sounds crazy. And you're like, well, why? Well, you're closing a trade line and it's probably one of your longer trade lines. So, credit scores, there's a lot that goes into it, but, payment history, length of trade line, and then anytime you close a trade line, you get dinged, which is counterintuitive, I agree. So no, I really don't want you paying off a car right before you apply. I would rather look at the situation. If I look at it and I go, your debt to income's a little high, like we got to pay off that car to get you where you want to go, I want you to pay it off at closing, okay? Closing. Because you guys are like, what the hell is she talking about? Closing is, let's say I would pre-approve you. My pre-approval would be based off you. Let's say you have to pay off the car, paying off the car at closing. So at closing, meaning when you're signing the loan docs, you're about to get your keys, you're bringing in your money for maybe, I don't know what type of loan you're doing, your down payment, closing costs. That's when we get the car money, okay? And then the escrow company or attorneys would make sure that the car was paid off. Cool. That is the easiest, cleanest way to do it. Sometimes people will be in like the middle of the transaction. They'll be like, oh, I paid off the car. We have to get a credit supplement. It's a whole process. It's way more difficult than paying it off at close. So the most important thing to get from this, student loans are the same way, because student loans, when you pay them off, it closes them. Now look, credit card debt, do you have to pay it off before you apply for a loan? No, but I'm going to say this. I was talking with a gentleman just today, and because of the way his employment's structured, he's about 1.5 years out, right, before he can show the income that we need for this to work. In his case, I said, look, like the difference between your rent now and what your mortgage payment's going to be, I want you to put that money towards paying down your credit card debt every single month. And once that's done, save that money, right? And if you guys are doing long-term planning, okay, 1 year, 2 year, 3 year, 4 year, 5 years, whatever you're planning for, ideally, look, let's just be honest. Credit card debt is not good. For you financially, long-term, it's not good. It's something, everybody has at some level, but it's not good. So if you are doing long-term planning, part of that long-term planning is doing a budget so that you're living within your means, you're paying down that debt, you're stacking cash, but most importantly, you're living within your means. Because if you have a ton of credit card debt, 9 out of 10 times, it's because you are spending way more than you make. It never ends up well, right? Long term, it doesn't end up well. So do you have to pay all your credit cards off before you apply for a loan? No. But if you're doing long-term planning, long-term financial planning, this is something that comes into play. Okay. So if you're like, Jen, I've got a lot of debt, but I need to buy a house next month. Great, let's look at it. You do an application, we'll look at your debt to income, let's go through payments, let's make sure this is going to make sense, and let's also talk about a long-term game plan. Because what a lot of lenders do is they're like, oh, fill out an app, and they push your debt to income really high. Okay, and I have other videos on debt to income. Maybe I'll link one. I don't know, we'll see. I think it's in my playlist, How to Buy a House. Anyways, they push your debt to income really high on buying a house, but you've got all this debt too. You're never gonna get ahead unless you suddenly start making a lot of money. So if you have a bunch of debt and you're applying to buy a house, I would argue, let's look at the debt to income. Definitely let's not max you out, because over the long run, you do wanna get rid of that, okay? They own you. It's messed up. Like, I was talking to a client the other day, and he's like, Jen, my credit cards are at 30%. I was like, oh my God. Like, there's not a limit that's realistic on credit cards. And it's crazy. It's like, if you want to talk about some of the stuff our legislators should be doing, they should be capping credit card interest rates, and there's one company that, I don't want to say the word targets, make up a different word. Targets mean whatever. They target military people, okay? They do. That's what they do. And, I've seen far too many credit reports where the amount of credit cards, like, they're giving someone a limit that's more than what they make a year. Like, this doesn't end well. We all know this, and it's just so crazy to me, but we'll save that rant for later. So look, the key thing, first thing, don't pay off everything before you apply. Paying off a car or a student loan, an installment, a long-term installment debt, that can actually lower your score. With the credit card debt, look, don't feel bad. Like, we see it every day. It's not a big deal. We don't judge, but I would be a bad lender if I didn't talk about the future with you, right? Because I want ultimately the house to be a benefit and not a burden. Okay, so that was something that we saw a lot of. People were thinking they had to pay everything off. Okay, the next thing that we were seeing, a lot of people have had bad experience with lenders. And, I think this is actually the last thing I'll cover in this video, because this is a broader topic, but it's really important. So, I was talking to one gentleman, and he hasn't applied for a loan in years because he had such a bad experience with a lender before. And it wasn't just that he got a bad deal or the lender ripped him off, right? Because we all know that happens. I have another playlist. I know I'm just advertising playlist today. The dirty side of lending. No, the dark side. The dark side of lending. Check it out. It'll tell you everything that's messed up that happens. Sometimes we'll see that where there was some sort of predatory behavior. But what I see more of is I see people being bullied. And I see, I'll hear, well, I just didn't think because they said. And what you need to understand about lenders is, first of all, if you get off the phone with them and you feel like you're just the worst, okay? That's a reflection of them and not you. That's a reflection of them, right? My job is not to judge you. It's not to judge you. It's to look at the financial situation you're in and to look at what your goals are and to find you a path there, okay? It may be long-term. There may be work that needs to be done, but that's my job, okay? My job is not to be like, yeah, like, I don't know how you even function, right? Like, oh, that's crazy. I don't even know who that person is. But there's lenders like that. Right? So if you have someone that's just negative, say goodbye, okay? And if you've dealt with someone in the past and you feel like you'll never accomplish home ownership because of that dealing with them, just call us. Guys, seriously, like, we do planning where it's like, one of my favorite clients, I know she's watching, my little Florida friend, we've had clients where, like, maybe their credit score wasn't the best and there was work that needed to be done. And they'll call me a year, 2 years later, and they'll be like, hey, I did it. And we'll be like, let's go. And we get the house, right? Or, you know, income, right? I've had people who have reached out and maybe they're in between jobs or they're just getting out of school and they don't know what to do. So we talk about it and they call me and they go, I did it. And I'm like, oh, tell me about it. And we hear about the job and what's going on. And they get the house. So I'm getting goosebumps. I know I'm very sentimental, but like seriously, I would not be doing this job anymore if it wasn't for these moments. It is literally these moments, which is why I'm still a lender, right? There's a lot of stress with lending, but it's the moment, you know, after someone's had something where they had to do some work, but they do the work and they get that goal, and it's just the most rewarding thing in the world. So look, guys, not all lenders suck. They're not all mean. There's a lot of people that really just want to help you get to the next step. School doesn't teach this. I say it in videos all the time. You know, I'll get people who are embarrassed or ashamed because they feel like they should know more. How would you, right? Like, look, how would you? There's stuff, I mean, there's stuff I don't know. I don't know how the stock market works. Not really, right? Who does? Like, I don't even think the people in the stock market do, right? No one taught you this, okay? So always feel free to reach out, ask us questions. But, you know, a lot of the stuff I'm seeing is just this feeling that people feel they need to be perfect, and you don't. That's the key. You don't. There's so many different loan programs. But at the same point, right? Like, you want to end up in a position that you're financially secure in, okay? That can help you accomplish your other financial goals. Really important. So, you know, if you're talking to Alyssa or Sandy, sometimes they'll do budgeting if you want. Debt to income, you know, talking about all of this stuff. This is what we're into. So I'm going to wrap it up because I know I'm rambling. I got all goosebumpy, and then I started thinking of, like, you know, how many great clients we've had over the years, and it's very rewarding. So don't pay everything off, you know, don't close out credit lines. If someone was horrible to you in the past, forgive them for being horrible. They're working on their own karma, okay? But that's not who you are. Your credit score is not who you are. What's in your bank account is not who you are. All of this stuff can be fixed, and it can be increased, and it can be changed. We just need to know where your goal is. That's it. So anyways, thank you for watching, guys. Yeah, thanks for watching.